Hello, everybody. My name is Lush Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending July 14th, 2023. Looking at the market indexes for the week, the TSX, S&P 500, NASDAQ, and Dow Jones and Russell 2000 were all up significantly this week, with most of the indexes up at least 4 days this week. Gold was up and oil was up over $75 per barrel for the week. In Thursday's trading session, the benchmark S&P 500 climbed to a 15-month high, and the tech-heavy Nasdaq 100 posted an 18-month high. Oil prices jumped about 2% to a 10-week high on Tuesday, boosted by a falling US dollar, hopes for higher demand in the developing world, and supply cuts by the world's biggest oil exporters. The gains put Brent on track for its highest close since April 28th and WTI on track for its highest close since May 1st. Turning to Canada, on Wednesday, the Bank of Canada increased its target for the overnight rate to 5%. The bank is also continuing its policy of quantitative tightening. In a move aimed at curbing persistent inflation, the Bank of Canada raised its key policy interest rate 25 basis points to 5% on Wednesday. This marks the highest rate in 22 years, indicating a major shift in the country's monetary policy. The decision, led by Governor Tiff Macklem, was fueled by evidence of excess demand and core inflation. Although it has come down some during 2022, it remains elevated. Both factors have proven more tenacious than initially projected, prompting the bank to revise its outlook for economic activity and inflation. The loonie jumped to its highest intraday level on Wednesday since June 27th, trading at $1.31 per US dollar. In the accompanying monetary policy report, officials forecast inflation will stay around 3% for the next year before gradually declining to the 2% target in mid-2025, 2 quarters later than previous projections. The economy is seen averaging about 1% growth in the second half of this year and first half of 2024, an upward shift from the stall expected earlier. The bank now predicts the output gap will close 9 months later than previously anticipated, early next year. The substantial forecast adjustments illustrate why policymakers restarted their tightening campaigns in June. The central bank's attempt to pause interest rates earlier this year proved untenable in the face of stubborn price pressure and surprisingly robust consumption growth. But delaying the return to price stability suggests the bank is struggling with its primary job, even as higher inflation expectation risks become further entrenched. Quote, while the Bank of Canada can't shut the door on more monetary tightening, Canadians might finally be seeing some light at the end of the rate hiking tunnel, end quote. Royce Mendez, head of macro strategy at Desjardins Securities, said in a report to investors. Policymakers decided to hike, quote, in light of the accumulation of evidence that excess demand and elevated core inflation are both proving more persistent and taking into account its revised outlook for economic activity and inflation, end quote, the bank said. Turning away from inflation and interest rates, the Laurentian Bank put itself up for sale, making its share price skyrocket by around 25% in one day, since that is the typical offer by a buyer, giving the shareholders a bonus for agreeing to the sale. Note that if no sale happens, the shares are likely to come back down. The bank is a small bank and won't make a large difference in the Canadian banking landscape. Turning to the United States, while the U.S. June employment creation of 209,000 jobs is below the consensus forecast, and while revisions are negative, the rest of the monthly jobs report will not get in the way of a July hike by the Federal Reserve, but will moderate expectations for what happens thereafter. Specifically, hourly earnings grew by 0.4% month over month and 4.4% annually. The unemployment rate fell from 3.7% to 3.6%, and the labor force participation remained at 62.6%. Overall, a good jobs report in the US. The US CPI data for June came out on Wednesday, and all the major data points were better than expected, and the headline inflation year over year was 3%, a full percentage point lower than the previous month's year over year, which was a significant jump down. The US consumer prices rose modestly in June and registered their smallest annual increase in more than 2 years as inflation continued to subside, but probably not fast enough to discourage the Federal Reserve from resuming raising interest rates later this month. The Consumer Price Index gained 0.2% last month after edging up 0.1% in May, the Labor Department said on Wednesday. The markets are expecting the US rate hikes are close to done and responded positively. The PPI, which is the Producer's Price Index, came out on Thursday and rose only 0.1% in June, lower than expected. This wholesale index also making it look like inflation has been beaten and the interest rate hikes are at or near the end. The upcoming July interest rate meeting by the US Fed is still expected to raise another 0.25%, however. EV buyers in the US are still overwhelmingly buying Tesla Model 3 or Model Y, but note that Tesla's market share of EVs has been coming down. Tesla has increased its share by 29% year over year, with the gap between Tesla and the next closest company more than 300,000 vehicles. Also note that only 7.2% of car sales are EVs, but this number is steadily increasing. Rivian's R1T outsold Ford's F-150 Lightning in Q1 of 2023, making the Rivian pickup the best-selling electric pickup in the country. Ford has hefty demand for its F-150, but not enough production yet. Tesla reports its all-important profit margins on July 19th, and after Tesla's EV price cuts, those margins are in question. Now for some bits and pieces. The Hong Kong listed tech stocks outperformed on Monday, with Alibaba Group climbing over 3% after China fined the company's affiliate Ant Group $984 million for violating laws and regulations, igniting optimism that a years-long regulatory crackdown on the fintech has ended. The Chinese June CPI stood at negative 0.2% month over month and 0% year over year, weaker than expectations of 0% month over month and plus 0.2% year over year. China is on the opposite side of the business cycle than Canada and the US, with actual deflation happening, with both the Consumer Price Index and Producer Price Index being at 0 and significantly negative, respectively. Finally, looking at next week, we have companies reporting next week for the Q2 reporting. We head into Q2 earnings season with a market that has low expectations, looking for a 7% contraction in S&P 500 earnings. That sets us up for positive surprises. So on Tuesday, we have Bank of America, Novartis, Morgan Stanley, Lockheed Martin, and Charles Schwab. On Wednesday, we have Tesla, ASML, Netflix, IBM, Goldman Sachs, Kinder Morgan, and United Airlines. On Thursday, we have Taiwan Semiconductors, Johnson & Johnson, Abbott Labs, SAP, the Canadian Fraser Timber, and on Friday, we have American Express and Schlumberger, because it is fun to say. Economic events next week. On Tuesday, we have the Canadian Consumer Price Index and Producer Price Index. So we'll see if the Bank of Canada was correct in increasing interest rate this past week. On Wednesday, we have US crude oil inventories, which will affect oil prices. And on Thursday, we have US jobless claims, which speak to the health of the US economy. If you have any requests on what you'd like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.